Hey everyone, I need to talk to you right now because something just happened in silver that most people said couldn't happen. And if you're watching this even a few hours late, you might already be wondering why you're seeing price action that doesn't match what you heard yesterday. So let me be clear from the start. Silver just broke through a level that institutional analysts, bank forecasters, and even some of the most respected voices in the metals space called impossible. Not unlikely, not difficult, impossible, impossible. And I'm not here to hype you. I'm not here to tell you to panic buy. I'm here because if you hold silver, if you're watching silver, or if you've been waiting for a signal to pay attention, this is the update you need. So stay with me. I'm going to break down exactly what happened, why it matters, and what you should be watching next. Now, before I go any further, let me remind you what this channel is about. We don't do price guarantees here. We don't do get rich tomorrow. What we do is structured market research. We track levels, we track catalysts, we track the difference between noise and signal. And when something significant happens, we break it down in plain English so you can understand it, not just react to it. That's the difference between being informed and being manipulated. And today, I want you to be informed because this move in silver is not random. It's not a glitch. And it's definitely not something you should ignore. If you're new here, welcome. You found the right place at the right time. If you've been with me for a while, you already know how we do this. Let's get into it. So here's what happened. Silver broke above a resistance zone that has held for months. I'm talking about a level that has rejected price multiple times. A level where every time silver approached it, sellers showed up heavy and pushed it back down. This wasn't just a technical level. This was on a psychological level. A level where traders had been conditioned to expect rejection. A level where algorithms were programmed to sell. Oh? A level where institutions had positioned themselves short, expecting the same pattern to repeat. And it didn't repeat. Silver pushed through. Not with a weak wick, not with a fake-out spike that immediately reversed. It pushed through with momentum. It pushed through with volume. And most importantly, it pushes through with follow-through buying that tells us something has changed. Now, I want to be careful here because I know how the internet works. Some channels are going to show you a chart right now with arrows and circles and tell you silver is going to $100 tomorrow. That's not what I'm doing. I'm doing is showing you what actually happened and why actual analysts are paying attention. The level we're talking about is in the zone between $32 and $33. For months, this zone acted as a ceiling. Every rally stopped there. Every breakout attempt failed there. And the longer it held, the more people believed it would hold forever. That belief just broke. Now let's talk about why this level was considered impossible by so many voices in the space. And I want to be fair here. These weren't just random people on Twitter. These were institutional forecasts. These were bank reports. For a bank report, these were analysts with decades of experience saying silver would not break this zone in the current macro environment. Here's what they were looking at. Number one, the dollar. The dollar index has been relatively strong compared to historical silver breakouts. Usually silver breaks out when the dollar weakens significantly. That hasn't happened yet. So the assumption was silver couldn't rally hard without dollar weakness leading the way. Number two, real yields. Real yields, meaning interest rates adjusted for inflation, have stayed elevated. When real yields are high, the opportunity cost of holding non-yielding assets like silver increases. So the assumption was silver would stay suppressed until real yields drop meaningfully. Number three, institutional positioning. According to the Commitment of Traders report, commercial traders, the big players, had been net short silver for weeks. The assumption was they wouldn't be wrong. They usually aren't. Number four, historical pattern. Silver has a reputation for false breakouts. It spikes, traps buyers, and dumps. It's done this so many times that even bulls were skeptical of any move higher. So when you combine all four of these factors, you get a consensus that said silver breaking above 33 was not going to happen. At least not now. At least not now. At least not without a major macro shift first. And yet, here we are. So why does this matter? Why am I making a video about a breakout when breakouts happen all the time in markets? Because this one is different. And here's why. When a level holds for months and then breaks, it doesn't just change the chart. It changes the psychology. It changes the positioning. It changes the algorithms. It changes the narrative. Traders who were short that level are now underwater. They have two choices: cover now and take a loss, or hold and hope for a reversal. If they cover, that adds buying pressure. If they hold, they become fuel for further upside if the move continues. Traders who were waiting for confirmation just got it. Sideline money that was waiting for proof now has a reason to enter. That's new demand. Algorithms that were programmed to sell at that level are now recalibrating. Some of them are flipping to buy mode because the structure has changed. And most importantly, the narrative is shifting. When silver was stuck below that level, the story was silver is weak. Silver can't break out. Silver is dead money. Now the story is becoming silver just did what they said it couldn't. What else might it do? That narrative shift matters more than most people realize because markets are driven by stories as much as they are driven by data. Now let me show you how we actually analyze this, because anybody can say silver broke out. What matters is understanding the quality of the breakout. Here's what we look at. First, we look at the candle structure. Was this a strong close above the level or just a wick? In this case, we got a strong close. That matters because wicks can be traps. Strong closes are harder to reverse quickly. Second, we look at volume. Did volume expand on the breakout, or was it weak? In this case, volume came in above average. That tells us real participation, not just a thin market spike. Third, we look at the reaction. What happened after the initial break? Did the price immediately collapse, or did it consolidate and hold above the level? So far, we're seeing prices hold above the breakout zone. That's called a retest, and it's healthy. It shows the old resistance is becoming new support. Fourth, we look at related markets. Is gold confirming? Is the dollar weakening? Are miners participating? In this case, we're seeing some confirmation from gold, which broke its own level recently. Miners are lagging slightly, which is worth watching because miners usually lead or confirm metals moves. Fifth, we look at the macro calendar. Is there any major data coming up that could reverse this? Yes, there's always something. This week we have Fed commentary and inflation data, so we're not ignoring risk, we're managing it. And this is what separates real analysis from hype. Hype tells you to buy now and ask questions later. Real analysis tells you what to watch so you can make informed decisions. Now I know some of you are thinking, okay, John, but what if this is just another fake out? What if it reverses tomorrow and everyone who bought gets trapped? Fair question. And here's my honest answer. It could reverse. Any move in any market can reverse. That's not a weakness in the analysis. That's just reality. Markets are not predictable with certainty. Anyone who tells you otherwise is lying or selling something. What I'm telling you is that the structure has changed. The probability has shifted. The setup is now favoring continuation rather than rejection. Does that mean it's guaranteed? No. Does that mean it's worth paying attention to? Absolutely. And here's the key difference. If you're watching this channel, you're not making decisions based on hope. You're making decisions based on levels. If price holds above the breakout zone, the thesis remains intact. If price breaks back below that zone with conviction, the thesis is invalidated and we reassess. That's how professionals trade. They don't marry a bias. They respond to structure. Now let me say something clearly for my USA audience. Nothing in this video is financial advice. I am not your financial advisor. I am not telling you to buy silver right now, or sell silver right now, or do anything with your money. What I am doing is providing you with market context, technical analysis, and educational information so that you can make more informed decisions on your own. That's the purpose of this channel. That's always been the purpose. And I want to add something important about risk, because I know some of you are excited right now. Excitement is dangerous in markets. Excitement leads to oversized positions. Excitement leads to chasing. Excitement leads to ignoring risk and focusing only on reward. So here's my reminder. If you're going to participate in any market, have a plan. Know your entry. Know your exit. Know your exit. Know how much you're willing to lose. And never, ever put yourself in a position where one trade can ruin you. I'd rather you miss a move than blow up an account. I'd rather you be patient than be reckless. And I'd rather lose a viewer who wants hype than watch a viewer get hurt because I didn't warn them. That's my standard. And it's not changing. Let me also tell you what not to do right now, because I've seen this pattern before. Every time silver makes a move like this, certain things happen in the community. Number one, don't chase with your entire stack. If you're going to add exposure, scale in. Don't go all in at the top of a candle. Number 2, don't listen to anyone telling you this is guaranteed to hit $50 next week. Nobody knows that. Nobody can promise that. And anyone who does is more interested in clicks than your financial well-being. Number 3, don't ignore your risk tolerance. If you're uncomfortable, reduce size. There's no shame in being cautious. There's only shame in being reckless and pretending you weren't. Number 4, don't forget about taxes if you're in a taxable account. Gains are great until you realize you owe a percentage to the government. Plan accordingly. Number 5, don't argue with the chart. If the breakout fails and price goes back below the level accepted, don't hold on to hope. Respond to what's happening, not what you want to happen. So what are we watching from here? Let me give you the key levels and catalysts. On the upside, the next resistance zone is between $34 and $35. That's where we expect sellers to show up again. If price pushes through that zone with strength, the next target area is around 37 to 38. On the downside, we need to hold above 32. That's the breakout zone. If we lose 32 with a strong close below, the breakout thesis is in trouble and we reassess. Catalyst to watch. Fed speakers this week, any commentary on rate policy matters. Inflation data, CPI and PPI can move metals. Dollar index. If the dollar weakens further, that's fuel for silver. If the dollar rips higher, that's a headwind. I'll be posting updates as these catalysts develop. So if you're not subscribed, now is the time, because these moves happen fast and missing context can cost you. And that brings me to my request. If this update helped you understand what's happening in silver, if you feel more prepared to make decisions now than you did before you clicked, please subscribe. Not for my growth, for your protection. Because when the next move happens, you want to be here getting real analysis, not stumbling onto some random channel that tells you what you want to hear instead of what you need to know. Turn on notifications. We post when things matter, not just to fill a content calendar. And if you've been with me for a while, drop a comment below saying something simple like, watching with discipline, or still here, still learning. It helps the algorithm. It helps new viewers find the real channel, and it tells me you're still with me on this journey. Now here's my promise. As long as you're watching this channel, you're going to get honest, structured, no drama updates on what's happening in silver, gold, and the broader macro environment. I'm not going to hype you into bad decisions. I'm not going to scare you into panic selling. And I'm not going to pretend I have a crystal ball. What I will do is show up consistently, break down the data, explain the levels, and remind you that markets reward discipline, not emotion. Silver just broke a level that most people called impossible. Does that mean it's going straight up forever, Again, it's going straight up forever. Oh, no. Does that mean you should throw your savings at it blindly? No. But does it mean something has shifted? Yes. And being aware of that shift is the difference between reacting and responding. Stay sharp. Stay patient, and I'll see you in the next update.